Good morning, everybody. Hope everybody's doing well. Good morning. Good morning. We'll get going in just a few minutes. Let some more people file in here. Good morning. All right. Good morning, buddy. If you're just joining us, appreciate it. We have a new website up that we posted last night, GammaEdge.com now. GammaEdge.us will still be up, but most of the links will redirect you to GammaEdge.com. So new format. As always, resources, free courses are all still free. So just make sure you can check those out, blog and newsletter. And then we just have some other areas that we've refreshened and made it a little bit easier to navigate for everybody coming to that. So make sure you share that GammaEdge.com with anybody, and make sure you check it out. Also, 14-day free trial. Again, money back guarantee as always, as long as you went through the education and all of our onboarding material. And then if you do not have a profitable trade within the first trial period, then first month, then we'll refund your money as long as you've completed all the education. So GammaEdge.com, make sure you check that out. And we'll continue to evolve this with all of our new tools, and all of our new content will continue to be posted here. All right, let's go ahead and start. Again, this is Michael coming to you from GammaEdge.com now. On February 24th, Tuesday, and we'll look at our three pillars: sentiment, structure, and trend, as we always do, and then cover some individual equities at the end. If you have any individual equities you want to cover, make sure you throw those in the chat, and we'll get to those using our web app and our systematic approach of how to look at the option structure. So let's go ahead and jump right into it. Market trend model, as always, bolded white line is your intraday instantaneous cumulative tick. This is buying versus selling in the overall market. Yesterday, obviously, we saw some weakness coming in to the overall structure and market towards the end of the day. Obviously, more selling versus buying, as this was in a negative slope to the downside, and now you're under those railroad tracks or momentum moving averages. These are your 1 to 3 day time frame for trading, and then the bolded white line is your intraday instantaneous. And we're still above the colored ribbon with a positive slope to the upside. So our mechanical portfolios are still turned on, our P-Trans to PX, as well as our wheel strategy portfolios. All right, moving on to a market trend model and trading view. Again, this is available for our members to upload. Again, we saw some weakness creep in very early on in the session. And then once we started moving below those momentum moving averages, if you were looking long or your thesis was long, obviously you'd want to exit those positions and then try to get short the overall market. But this was the anticipation. We actually started breaking key levels early on, zero gex and intrans early on, and then we saw the negative slope in the market trend model, and then we also saw negative slopes in our intraday call versus put speculation. So great opportunity to get short, and a lot of our members participated in the move down and capitalized on that. And then moving into that lower area where we were anticipating a bounce, we did see a short-term bounce via the market trend models. You'll see the tick ARCX. This is a little bit more quality and not as sensitive. And then the tick US is more sensitive. So obviously this started turning and had a larger move to the upside, and then started failing right at that lower momentum moving average, and then moving back to the downside into the close. So if you were thinking about getting long the overall market, obviously this should have been your indication to not hold those positions overnight, as we did not recover those shorter term momentum moving averages. All right, moving on, the SPX, largest, most notional value options complex. Again, this is the SPXA. We separate that, the SPXA and the SPXP. SPXA is your monthly expiries. This is heading into March OPEX, or monthly OPEX. Again, these are our tankers or our cruise ships that are institutional positioning, 40,000 foot view, that are controlling the overall direction of the market on a longer term tenor time frame. Again, call dominated, above and below spot price, but you'll notice extremely wide transition. And you also notice the DEX transition there. If we're below the DEX transition, we'd be more cautionary and look for a weakness down towards 6,800. But if we recapture that DEX transition, again, you're still within this overall choppiness structure up towards 6,900. Again, key level to recapture, and then move up towards 6,950. And then above that, a little bit of tailwind kicks in, and we look for a move up towards 7,000. Again, net GEX plus 1,900, 1,970. So again, this is the noise floor, or the noise floor is referred to as the balance between calls and puts. So really, there's no edge, slight edge for the call dominated overall structure, but could easily flip put dominated and negative within the overall structure. So again, we're at a balance point, and basically that's choppiness price action, and it could go either direction heading into the March monthly OPEX. So we'll continue to watch this day over day, and significant OI there. All right, moving on, the SPXP. Upper quartile here, as we've denoted. So the 24th and 25th, today and tomorrow, obviously heavy weighted. Thursday, really not as much weighted, and then Friday. So Thursday, or today and tomorrow, obviously we have a good handle on what the overall direction is, but then Thursday may be a crapshoot, and then obviously heading into Friday. So we're put dominated now with the gamma condition. We're under the transition areas at 68.70 on the DEX transition. The GEX transition goes all the way down towards 68.25. Implied open was around 68.50 at the time of looking at this, but under these transition areas and within this overall transition, again, extremely choppy price action. You see, obviously, the significant in the money puts overhead. We'll look at that on the net stack command, but that's our headwind for a move to the upside until this changes. And then obviously significant charm contribution overhead that will continue to be a headwind unless we get above these levels and we see the call versus put speculation turns towards call speculation versus put speculation. To the downside, obviously 6,800. We anticipate if we're above that charm supportive area, as well as significant puts into that area. If we capture those and start moving below that, then obviously we look for significantly more weakness down towards 67.75, and then ultimately down towards 67.50. So again, 6,800, kind of the line in the sand for the bulls to stay above. So we'll watch that intently, and you see that it continues to be supportive as long as we're above that level. And then if we're below 68.50, again, there will be a charm headwind there, and then 6,900. Obviously, significant headwind moving a boulder up a mountain as you continue to climb this overall structure. All right, let's move on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. So this is weighted for short dated call versus put gamma. Again, we saw a move down the SPX yesterday, but interestingly, we actually had a positive slope in the GEX ratio, but we're well below the 1. So this is indicating that the bears are in overall control, and that we're put dominated within the overall structure, which we saw on the web app. So again, if we see price appreciation, we want to see this move above 1, indicating call speculators coming into the complex and are driving spot price higher. But if we do not see that, if we see spot price continue to move up, most likely that is just an overall put monetization event without resulting out of the call speculation. Again, that's not sustainable for a move to the upside. All right, moving on, the SPXP delta balance. Again, weak structure we talked about yesterday within the middle of the week heading into Friday, and that is being really maintained. You see the delta balance well below the 0 line, again, being drugged down by the left-hand plane. That's your out of the money put speculation, in the money calls, the red dotted line, and then your green dotted line is your out of the money call speculation, as well as in the money puts. So it does improve slightly towards the end of the week. Obviously, this is into next Monday. This is the 28th here, which is Thursday into Friday, 26th here. And then, again, we're not getting above the 0 line. So that's indicating, obviously, the bears maintaining overall control and weakness in the overall structure and positioning. Now, we do have a slight positive slope in the left-hand plane today, trying to climb above the zero line. Again, I would not put a lot of weight on this as the overall structure and market trend model continues to the downside, so everything looks weak there. But if we do get above 68.50 and then 6900, we do have the opportunity to move to the upside. But again, the overall structure projecting on out for the rest of the week looks fairly weak. So this would have to improve significantly from a sentiment and structure standpoint for us to have a large move to the upside. All right, SPXP net stack command. Again, we talked about that in the money puts, 68.50. We're going to need to at least recapture that. And then in the money puts become out of the money calls at 68.75. So key level to the upside. And that actually matches around the top of the drunken sailor range. So again, that would be a important recapture for the bulls. And to the downside, 68.30. If we get below 68.28, again, these in the money calls turn to out of the money puts, and we'll be capturing significant more negative net deltas, which would drive us to the downside. And you see net charm, as I spoke about, 6,800, really need to stay above that as a supportive and positive charm level. And then to the upside, out of the money calls at 6,900. Again, we get above below 67.97. Then obviously we turn these out of the money calls to in the money puts. So that 6,800 will be a key level to the downside. And then net gamma, you see those highest sensitivity levels there. And then obviously Vanna, we do have the opportunity for a Vanna tailwind if we get above obviously 6,900 and we see out of the money calls come into the overall complex. But again, significantly above spot price where we're at now. And we've discussed those levels there. So, all right, let's move on. 0DT put dominated to start the day. Again, we talked about the transition levels, confluence of DEX and GEX at 68.25. Looks like we're at least going to open above that, but we're within the overall DEX transition area. Above GEX transition, 68.55 to the upside would be that first capture. And then we talked about 68.80. If we grab 68.80, then we have an opportunity for a tailwind up towards 6,900. So again, you could take a long above 68.55 again, but you're still within the drunken sailor range. So again, that may be extremely choppy and you might experience a little bit of drawdown within that overall. Again, we'd have to see the out of the money call versus put speculation. We'd have to see call speculators targeting higher strikes for a move to the upside, as well as the market trend model improve. The more higher risk reward trade would be a recover of 68.80 and then for a long up towards 69.90 and then look for a rejection there. If we reject 68.80, we could be short that level for a move back down towards 68.55. And then if we reject 68.55, we'd look for a move back down towards 68.30. You'll know this sitting in the C of the overall transition. These negative or short sign on the puts there. So again, our known overall strikes that are actually short, we tag those with a negative, so we'll know where there's at and within the overall transition, then result in net delta and net gamma. So again, 68.30 could be that area of magnet within this overall transition that we actually see spot price navigate to. And then we'd look for it to hold the 68.25, 68.30 level and look for it to bounce off of that. And then below that, we'd look for a move down towards 6,800. So key levels I outlined this morning on X. And you can see that within the overall structure for today. So, all right. Again, thanks everybody for joining us. We'll go over those individual tickers. Again, GameEdge.com is our new website. Make sure you check that out. And GameEdge.us is still up. If you navigate to there, you'll be sent to GameEdge.com. All right, let's move on to can you walk through the tools to determine if GLW is overextended? Okay. So we'll look at GLW from an option structure standpoint. I don't like to look at overextended or oversold or oversold or extended to the upside, however you want to say that. For those indicators that are built for that, I don't think a lot of people use them in the correct way. Overbought, sorry, I couldn't think of the overbought or oversold. But we can look at an option structure, and basically what we're going to try to look for on the option structure mechanically is, do we still see speculation to the upside, which would be out of the money calls, and do we see the structure continue to advance strike over strike, or sorry, expiry over expiry. So that's the key way to understand if market participants are still targeting for higher or speculating for higher prices. So as of Friday, obviously GLW only has Friday expiries. So we see 150 to the upside. That's PX. Obviously, that's speculation to the upside. We see transition level here and spot price at 149. So if the structure does not continue to advance, you do not see this 150 continue to advance up, expiry over expiry, it's going to be difficult for the price to advance. And you obviously see net charm here. That's going to be your headwind because these are out of the money calls at the moment. If you capture those out of the money calls at 150, then obviously you have an opportunity to price appreciate. But we do not see a significant amount of speculation above 150. Move here, the next expiry into March. Obviously, you do not see the structure advance much. Now we do see 160 come in a little bit, but 150 is basically maintained COTMC at 155. That would be an overall possible monetization event. So you really do not see the structure advance much. And then to the 13th, you see it actually advance to 160. So after these next two expiries, you see the structure continue to advance. So the opportunity is there for price appreciation past the 27th or past the 6th. But unless this structure does not advance between that time, I would assume that 150 is probably going to be a headwind and a monetization area for those calls. Supportive on any pullback. GLW looks good, but 150 is probably going to be that area. 150 to 155 is going to be that area until we get past the 6th and head into the 13th. And then if you look at the upper quartile gets all of the highest weighted OIs. 150 is really that line in the sand to the upside that's probably going to be difficult to overcome. So hopefully that helps, Ohio smoker guy. All right, let's look at PEP. Upper quartile on PEP, everything looks good. Above transition, 170 to the upside, call dominated. Good. Let me know if you have any other questions. All right. And we have some other tools we could go through, but the web app is the easiest. So 170 to the upside on PEP looks good. Probably where you're going to see some stalling monetization into that overhead 172.50. Friday 170. Next Friday 175. So structure advances a little bit there. Again, still a charm headwind with those out of the money puts. 113, or sorry, the 13th, 170 on Pepsi. It looks like probably the upside is going to be capped into that overhead unless we see the structure really change in advance. Amazon, call dominated. Let's do the highest quartiles. Call dominated. You're right at the top of transition area. We do have some in the money puts overhead as well as out of the money calls. You see that area at 220. 230 the upside, highest speculation. So you really need to see these be overcome with out of the money calls. This area right here for upside movement. Let's look at Friday isolated. 210 to the upside looks like that speculative area. So 210 looks probable to the upside for into Friday. Again, if the market cooperates and the MTM continues to improve. And then 3.2, 215 to the upside. So structure continues to advance there. So everything looks good on Amazon. Call dominated. Any pullback towards 200 would be an opportunity to get involved, I think. 195 to 200 looks good. All right. Again, not financial advice, but just looking at the overall option structure. So, GLD. Sorry about that, Perry. GLD. Let's look at that one. Let's do upper quartile first. Call dominated. 475 to the upside. Looks good. Speculation to the upside. Everything looks good on GLD for a move up towards 475. Let's look at this Friday, 475. We actually have INGEX and PGEX right at that level, and you're below transition, so it's going to be difficult for price to move up through that 474, 475. So even if we get a jump up in price there, expected move is as actually 31 points. That's significantly high, though. I'm not really anticipating that we move that much. And then COI is up there at 490, so that's interesting. We still see speculation all the way up towards 490, but cap on price into Friday is going to be 474 to 475. And then let's look at the upper quartile. That'd be the next Friday's expiry, the 6th. Call dominated, 475 still. So structure really doesn't advance much on GLD into the next two expiries, 475. All right. CIEN. GLD. I did GLD. Amazon. Got to do Amazon. Sorry. Let's do CIN since we're here. Call dominated above transition for 357 to the upside. I would anticipate some stalling into that overhead area. That's Friday's 357.50. Yeah, going to be tough to move above 357.50 is actually PGEX and COI. So highest call open interest there. 3.6, 350. So the structure actually drops after this Friday. So anticipate maybe some monetization and profit taking. And then the structure is 350 there. So 357. So structure actually drops after this Friday. So supportive on any pullbacks, but 350 to 357.50 is going to be probably the upside area. That's going to be your profit taking area, most likely. Amazon, did I go over? I didn't go over Amazon. Oh, sorry about that. Typed it wrong. This Friday's expiry, 210. I think I went over Amazon, didn't I? I think so. 210 to the upside. It's going to be difficult to move above 210 next Friday. Structure actually advances to 220 into next Friday, so that looks good. You need to get above transition, though, for an opportunity to move up towards 220. And then upper quartile, 230s peak X, so that looks good. I did talk about this headwind here, though. It's going to be slow going because of the net charm of the out of the money calls and in the money puts there. So, all right. Okay. Thanks everybody for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live. Again, check out our new website, gammaedge.us. Like and share our content also across the social sphere so we can increase our scope and increase our reach of education for all of people out there trying to navigate option structure. All right, thanks. Oh, sorry about that. Thanks, everybody. And manage risk as always, and we'll see you later. Goodbye.